Hello traders, look at this scenario. You took a trade and the price has been moving in your favor with a nice lower lows, higher lows and higher highs, and all of a sudden price reverses on you and take out your stop. Why did this happen? Now when you look at the chart very well, you didn't see any form of order block here or any form of supply and demand that you can say, okay, this was what is responsible for the reversal in price. In this video, I'm going to show you how to spot some POI, hidden supply and demand zones, so that you can improve your trades as you go on. Okay, so right now, hidden base. What are hidden base? This is what I'll talk about, or I'll call them the magic of the week, the power of wicks. Okay, wicks in any is very, very important. Okay, by wicks, this is what I mean. You have a candle and a wick. Now this candle says a lot. Now the wick, I see wick as the area of what man is a bullish candle. The wick here are simply as a what manipulation, where others, okay, buying or step in to take price to the upside, therefore making this zone here a demand zone. So the wick are where others came in to manipulate people, thinking price is going lower, and all of a sudden price moves to the upside. So in the future, when price comes back to this wick, especially in a lower time frame, you will notice that this wick is a demand zone where you can continue to take the trade to the upside. Okay, and especially when the order flow, the institutional order flow is bullish, your wick is a very, very powerful tool, or POI you can use to profit from the market. Okay, so I'm going to explain this in two folds. Number one, in continuation trend, okay, and number two, in a reversal. So stay with me. So you know, basically the supply and demand that we have, the normal rally based rally, drop based drop, rally based drop, and rally based rally. Okay, in a typical supply and demand, you can see the candles. For example, all of this is a demand zone. You can see this and expect price to react from here. Okay, this you can see. But what happens when you don't see this? Okay, and that's what I want to talk about. An hidden base are simply what you can have it in the form of continuation play. For a continuation play, we have an hidden base to be this. 1 minute. We have some play. And we have look here. So hidden base are simply, they call them kissing candle. This is for the continuation play. Kissing candle, the first bullish candle, then the second bullish candle. The wick, okay, the high of this candle and the low of this candle is the hidden base. And why is it hidden base? It is an hidden base because on that particular time frame you are looking at it, you cannot see any form of what demand or supply zone there. Until you go to the lower time frame, it will now be revealed. Okay, sometimes you might take a trade in the 1 minute and price is moving higher, but what happens, price can decide to reverse on you once it gets to an hidden base in the 5 minutes or 15 minutes, and you thinking, okay, you must get to this order block here, and you see price tap in here and then reverse on you. So with this idea, you'll be able to manage your trade very well. You'll be able to execute your trade very well, and at the end, you become a profitable trader. So let's look at the chart and see what I'm talking about here. Let me clear all of this. Now, this is the monthly chart. Let's look at the weekly. So now, looking at this candle here, this particular, for a continuation, if I'm to trade continuation play, for example, I want to be a seller when price getting here, I can, because this to me is an hidden base, is an hidden supply zone that push price lower with a beautiful inducement. Now let's go to the lower time frame and see this. If you go to the daily, nothing much, we don't really see much. 4 hours, then what can you see in here? Okay, what can you see in here? This is an order block. Okay, a supply zone, clear supply zone, that when price come in here back, you can take the trade. You can see on the weekly it is hidden, we can't see it. Okay, on the weekly it's hidden, we can't see it. Okay, we don't know. If you are not very clear with this, you will think price will just pass through this. But however, right there is what we have, what a supply zone on the 4 hour. Okay, on the 4 hour there, we can see here we have what is simple what supply zone that led to a break of structure. Okay, that led to a break of structure. So it makes sense when price comes to clear all this liquidity, it can tap into here and then continue moving lower. So that is the first point there, a drop based drop situation. Okay, why is it drop based drop? A drop based drop situation, here we have a drop, we have a base. That base where orders what were accumulated before price move again is a base. And if you don't understand this, I did a video on supply and demand. Make sure you check the description, you are going to see it there, or the card up here. You're going to see that video on supply and demand. Okay, and secondly, if you have been watching this video and you like what you are seeing, kindly give me a like on this video, and if you have not subscribed, subscribe and hit that notification bell so that when I release content like this, you'll be the first to know. Okay, so this is for a continuation push in a bearish scenario. Okay, so let's look at the bullish side. Now let's look at Euro USD. You will see this is an hidden base here, still on a drop based drop formation, because I'm just shooting this video impromptu. I just thought of it and decided to share. So we have a drop base. Now basically you might not see this as a demand zone or a supply zone because you've not seen that bullish candle. Okay, but what I'm saying, I can refine this to just only the wick, especially the wick on the monthly. This way also you can decide to take a trade. Okay, your hidden base can be found on number 1, take note, monthly wicks, weekly wicks, and daily wicks. I can narrow this to just the wick on the monthly time frame, the wick on the weekly time frame, and the wick on the what daily time frame. Just like in this case here, this is the wick on the monthly time frame. This alone, you can highlight this and expect to take a trade off it. Okay, doing that because I know this was what was responsible to clear this. You don't just pick at the random point. Anyway, you should pick the zone, the base, the peak that broke structure. Okay, or took out demand. I mean, this supply took out this demand. So when price comes back in here, I'll be looking to look for shorting opportunity in the lower time frame, because I know if I go down to the lower time frame, this region is a supply zone. If we go to the weekly, for example, let's see what we see here. Nothing more, still the same week. And when I see a weekly wick and a monthly wick together, that is confluence. Okay, I know that, okay, probably we might expect something important, and I use confluence a lot to validate my point of interest. Okay, so on the daily here, let's see what we have. Now you can see that you can now refine this to just this point here, this other block, or this entire candle. If you go lower, you notice that those areas are areas of what? Supply. Okay, so I can decide to work on the weekly wick. Okay, also the daily wick. Okay, these are daily wicks, and these wicks are responsible for a break here. So it makes sense. Okay, it makes sense to look for trade in here. Okay, now I'm not saying that the trade will move from here and then continue going low. As you can see, it came down here to move up. Probably price is looking to seek higher liquidity. Even at that, this week here is a supply zone. These are hidden bays. Okay, so as why do you mark your base, your POI this way? I understand that all of this, like this, is an order block, but at the same time I can mark just this alone because I know from experience that that zone is valid. Okay, that zone is valid because if I go to a lower time frame, I will see it as a supply zone. Okay, I can take a trading here. The wick here, the wicks are very powerful, especially on the higher time frame. The wicks, for example, looking at this here, you can see the wick here. This is a powerful supply zone. You can see price respected that before finally what giving way. Okay, so that is one way to look at it. If we go to the weekly as well, if we go to the weekly time frame as well, you are going to also observe that the wicks on the weekly candle is also an important aspect. For example, look at this week here. You can choose this as an hidden base. Okay, price came in here and then you can see reversal because in the lower time frame that zone is a supply zone. If I scroll down there, is a supply zone. Okay, you can see here a drop, base drop, price came in here and then dropped down, price came in here and then dropped down. Okay, same thing, you can do this all day long. Okay, what can you see here? This is another one here. Okay, even though this low will eventually be taken, okay, but you can see the push from here. You can see the push from here just because it's a demand zone. Okay, in this case is a reversal, a drop base rally, a drop base rally. When price comes in here, it makes sense to start looking for a short-term buy. Now I'm not saying you should look for a buy from here and then it flies up. No, what I'm simply saying is that these are your POIs where you can start looking at. You can back test and see what I'm saying, if it's true or not. Okay, the wicks are very, very powerful. Okay, especially on the higher time frame. Same thing, if you go to the lower time frame, if you are trading off the 5 minutes, maybe you enter on the 5 minutes or 1 minute, always be careful with the 15 minutes hidden base. Okay, because most times, because the market is trending in that direction and you are expecting reversal. Now once you buy it from here, you can see when price go to the 15 minutes hidden base, okay, you can see that reaction, and this reaction is all that you need. I used to tell my students, you don't need to predict the market precisely. Take the trade from here down here, fine, you can do that. Okay, but the most important thing is take the reaction of the zone. If it gives you 5 hours, 3 hours, you are good. You can call it a day. Okay, don't sit there and want to milk everything of the market. Okay, and thinking, unless your analysis is very, very tight and you know that, okay, based on my analysis our final target will be here. Okay, but what I do mostly, especially if I'm a beginner, just trade the reaction. Okay, also look at it. Let's look. You can see here hidden base. When price came back in here, okay, and also all this region, when price comes back, we can expect a reaction. All this area here, always take note of those. So when you are marking out your POI, you mark it out by considering the wick, especially once you are in profit. Okay, you can start taking partials when it start hitting this hidden base because they are supply and demand zones. Okay, take your partials. Okay, because from my experience I noticed, if I look at the lower time frame where I entered from, okay, I will notice that, okay, it's a free passage, bunch of what, what's it called, fair value gaps, and I will, okay, let me hold it till I get a block, and I will realize that price will just reverse. Okay, I learned this the hard way. Okay, you can even scalp from this 15-minute time frame. This could be all you need. This zone here, when it gets here, you can start to look for a short trade opportunity in the lower time frame, like the 1 minute. And if you have the second base time frame, beautiful. Second base, beautiful. Okay, so if you have any comment at whatsoever, you can put that in the description. Especially a wick that takes liquidity is always important. Like this point here, when price gets here, I will be looking to get involved in the market. Okay, the power of the wick. Now, what have we gotten here? Number one, as a reversal, okay, if this is a bullish push, okay, it's a bullish move, and we then end up seeing price going lower from here. If price comes to this point in the future, price comes to this wick in the future, I'll be looking to sell, because this is a rally based drop. Demand and supply is very, very important. Okay, and depending on how you apply it, you apply it with liquidity, because that's what I trade. What I trade supply and demand, liquidity, and market structure. Okay, and I give myself some rules to get engaged in the market. Okay, so one more rules, and then like this place here, for example, I know this will take a long time to reach. Okay, this week is my POI. This week is a powerful POI. When price comes here, I should expect a reaction. Okay, this is a POI. If I go to 4 hour, probably that will be of character. You can see manipulation, break of structure. So this is a powerful zone where I can be looking to get involved. So as a beginner, or if this is the first time of you seeing this, backtest it. Do not just take my word for it. Backtest it. During the weekend, you can go through the replay feature. That's how you learn. You learn when you simulate. You learn when you demo trade. You don't need to just jump in for the action. It took me years to perfect what I know now, and it's because during the weekend I still sit back, look at the trade I took, analyze it. Why did I miss it here? Why did this trade play out? Okay, and ask yourself so many questions. When you ask yourself questions, definitely you are going to see answers. So if you don't understand demand and supply, you can watch me in this video explain it. Have a nice day.